Session 22 of Unit 2 of Taxation of 5th Semester BBA of Mangalore University. In this session, let us study about the computation of total income and tax liability of individual assessees. Now, this is the chart showing computation of total income of an individual. Incomes as computed under the following heads after set-off of losses. So we are taking the incomes of the 5 heads in the order. First is income from salaries, amount, income from house property, profit and gains of business or profession, capital gains long-term as well as short-term, income from other sources, casual incomes like lottery, card games, horse race betting, and other incomes. So if we total the income of all these 5 heads, we get the gross total income. From the gross total income, we shall provide deductions under section 80C to 80U, and thereby we get the total income. We can round off the amount to the nearest rupees 10. Here we need to note that deductions under section 80C to 80U are not available against short-term capital gains and long-term capital gains. This is the format of computation of tax of an individual. It is neither for senior citizen nor super senior citizen. And this is a case where assessee doesn't have agricultural income. So after computing total income, first we shall take total income, then compute the tax liability. So first the tax on income that is liable to tax at special rates like casual incomes which are taxable at 30%, then short-term capital gain under section 111A at 15%, long-term capital gain on listed securities or units of mutual fund without indexing the cost of acquisition. So at the rate of 10%, on other long-term capital it is at the rate of 20%. Again, long-term capital gain under section 112A is at 10%. After allowing for these at the special rate, next we have to see what is the balance of income. Now let us calculate tax on the balance of income at normal rates. On first 2,50,000 tax is nil. On next 2,50,000 it is at the rate of 5%. On next 5 lakh it is at the rate of 20%, and on balance it is at the rate of 30%. Now here, in case of senior citizen who is aged above 60 years, instead of 2,50,000 it is on first 3 lakh rupees tax is nil, and then on next 2 lakh rupees it is at the rate of 5%, and remaining is the same. In case of super senior citizen that is aged above 80, on first 5 lakh rupees the tax is nil, and then next 5 lakh it is 20%, on balance it is 30%. So this is the change that we have to note in case of individual, senior citizen and super senior citizen. So we get the tax here. Then if the tax is less than 5 lakh, if the total income is less than 5 lakh rupees, we can provide rebate. We can deduct rebate from this total tax. Maximum is 12,500. In other case, if the total income exceeds 50 lakh rupees, then we have to charge surcharge at the rate of 10%. And if it is above 1 crore, then the rate goes higher. So after adding surcharge, then we have to add health and education cess on the tax as well as the surcharge at the rate of 4%. So there we get the gross tax liability. From the gross tax that is payable, we can deduct tax deducted at source as well as advance tax paid. So thereby we get the net tax liability or the net tax payable. We can round it off to the nearest 10 rupees. Now let us see the problem. The problem on computation of individual is asked for 20 marks in the examination. From the following information, compute the gross tax liability of Shri Amit, 65 years. So, the person is a senior citizen. For the assessment year 2021, income from salary is given computed. In case if it is not given computed, then we have to take the income from salary and deduct 50,000 rupees, which is the deduction from salary. If they give computed, you take the amount as it is. Interest on listed securities, gross, this comes under income from other sources. Interest on government securities comes under income from other sources. Income from house property, it is given computed. If they do not give computed, then you have to deduct from the amount from this annual value, or else you can take the amount as it is. Long term capital gain 70,000. Short term capital loss is given. You can set off short term capital loss from long term capital gain. Dividends from Indian company, they have given 4,000. Income from mutual fund 7,000. These are exemptable incomes which comes under income from other sources. Paid life insurance premium 13,000 on a policy taken after 1st April 2013 of 1,20,000. So 10% on the 1,20,000, it comes to 12,000. So we can provide deduction up to 12,000. Then donation to National Children's Fund, this comes under no limit donation and it qualifies for 100%. So we can provide under 80G. Deposit in PPF 30,000. This qualifies under deduction under section 80C. Paid medical insurance premium of 10,000. This qualifies under section 80D. So let us see the computation now. So first we shall write computation of total income for the assessment year 2020-21. Income from salaries, as it was given computed in bracket, therefore we have taken it as it is, 5,44,000. Income from house property, even it was given as computed, so we have taken 30,000 as it is. Capital gains, we have taken long term capital gain and we have deducted the loss from short term capital gain. So net capital gain is 60,000. Income from other sources, one is dividend from Indian company, it is exempt. Income from mutual fund is exempt. Interest on securities, listed securities and government securities, the amount is taken. So income from other sources is 7,000. So the gross total income, if you total the amounts of these 5 heads, you get 6,41,000. Now deductions under section 80. 80C for life insurance premium, which is 12,000, 10% of the policy amount, and PPF is 30,000, it comes to 42,000. ATD medical insurance premium 10,000. Donation to National Children's Fund 5,000, which qualifies for 100% deduction, so the entire amount is put here. So deductions under section 80, the total comes to 57,000. Now from the gross total income, we have to deduct deductions under section 80. We get the total income, that is 5,84,000. Now computation of gross tax liability. So the total income is 5,84,000. So we have to charge tax. First we have to charge tax on casual incomes, but in this problem there is no casual income. Then on the long-term capital gain is 60,000 after deducting the short-term capital loss. Therefore, tax on long-term capital gain at the rate of 20%, it comes to 12,000. Now from 5,84,000, we have to deduct the long-term capital gain amount 60,000. Therefore, the balance will be 5,24,000. Now, on the balance, as the person is a senior citizen, on first 3 lakh rupees, the tax will be nil. On next 2 lakh rupees, the tax is at the rate of 5%. On next balance, that is 24,000, it is at the rate of 20%. It comes to 4,800. So if you add 12,000, 10,000 and 4,800, you get 26,800. Now as the income is just 5,84,000, you don't have to add surcharge, because surcharge is if the income is above, total income is above 50 lakh. And also the income is not less than 5 lakh. If it was less than 5 lakh, you could have given rebate of 12,500, but here it is more than 5,84,000. So there is no rebate, no surcharge. So on this 26,800, now we can provide health and education cess at 4% on 26,800. It comes to 1,072. If you add this, the gross tax liability is 27,872.